broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're finally in the middle of the week, Wednesday morning. We are coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
I'm Prashant. Good morning. Good morning, Nigel. Well, it's time to get a bit cautious in the market now, right? Because you've had these weak numbers from HDFC Bank. The ADR is under a lot of pressure. Mid-caps are also looking a tad bit weak. So I guess now there is some amount of caution in the system, and the GIFT Nifty is also indicating a big fall this morning.
Well, I think the buy on dips will be tested today, right?
Yeah.
We're getting a fairly decent dip out there, and let's see how this plays out. But fair to say, we're in a bit of a flux this morning, and that's after a while.
Oh, absolutely. That's after a while. So, let's kick it off with what you need to know as we begin another session, right? So yesterday we saw a small pullback, about 1/3% or so. The Nifty was down about 60 points. Although at one point mid-session it was down a lot more. But then there was a pullback, as there always usually is. Mid-caps and small-caps also pulled back. They ended with about a 0.5% dot cut. Now, overnight, the cues are a little weak. So US markets, equity markets, they were down. So S&P was down about 0.4%. The Nasdaq was also down about 0.2% or so. Nothing very large at all. I mean, actually, some of these tech names, they post-close. A lot of them pulled back up as well. Now, let me get to some of the reasons. You had two things happening simultaneously, which was a bit jarring. One was the fact that data was weak in the US, but at the same time, you had one of the Fed governors who came out and said that rate cuts. We need to calibrate our expectations as far as rate cuts are concerned. Data first. That's the US Empire Manufacturing Survey, which actually plunged. In the month of January. The data was for the month of January, and this is the lowest that we've seen since May of 2020. That's a very, very steep fall. And then the commentary. This is Fed Governor Christopher Waller, who actually held his hawkish ground. You'd have thought that data is weak, and a Fed official is speaking after the data. You'd kind of mind that, but he did not. The speech actually guided towards 25 basis points cuts. In some quarters, there were anticipation of 50 and 75 and 100. But, well, he said we need to be careful about this particular process. When rates start to fall, it can't be dramatic, it can't be big. Which, by the way, markets also interpreted as saying that the first rate cut, which many were expecting was March, etc., that will most likely get pushed back to April, May, June, etc. The first cut itself, and then the quantum itself has to be brought lower. So rate cuts would not be rushed. That was a message from Fed Governor Wallace. Yields went up. Yields were up about 13 basis points. That's substantial on the 10-year. We're 4% plus now. The dollar surged. It came up to about 0.6, 0.7% gain on the DXY, the dollar index. And more importantly, technically, we are closer to the 200-day moving average after the surge, which stands at 103.4. We left off at about 103.32 on the dollar index. Just to circle back to the levels here on the Nifty, we closed below we need to see a close below 40 hourly exponential moving average. Basically, we got a negative close, but the hourly average is still held. So that number is 21,878. We left off at 22,000, just about 22,000. So a close above the hourly averages will give you the first signal. I think this morning you'll get that. But I think that'll a decisive break and close below it will give you a signal that maybe the up move is maturing. Then, of course, you get the 20-day moving average, which is even lower, which is at about 21,622. And I think that's been the kind of make or break level. So far, we've always made it. When we've gotten close to it, the markets kind of started to bounce. The last time that happened as well. So I think that'll be the ultimate test. Hourly averages and then the daily moving average, the 20-day, most important. Especially, it gives you a very good signal whether, in the short term, trend is turning down, trend is turning up. So 21,622 is that particular level. A close for the Nifty, and of course, on the upside, a close above yesterday's high, that's the marker. Which is unlikely. 22,124, you go above that, and then you start to wonder if this up move can stretch even higher in this leg, which I said looks a little unlikely. On the Nifty Bank, watch for a close above yesterday's high, which is 48,305. Again, unlikely given how the setup is. A break below the low, which is the more likely scenario, which is 47,010, will indicate that the up move on the Nifty Bank is also starting to mature. When I say mature, what I mean, I've been saying this for the last couple of days, is, are the markets in the very near term finishing something, finishing a leg, and then you basically go a little sideways, see a small pullback even. That we will only know once we get some of these markers which start to come into view, which is 20-day on the Nifty Bank and the recent low for the Bank Nifty. For the Bank Nifty, there is no real help from HDFC Bank numbers, which we will discuss in greater detail. If anything, I think it works to the downside for the Bank Nifty. And of course, it's a very large weighted stock on the Nifty as well. So it'll have its hit this morning as we start for trade. Sonia.
Oh, absolutely. And, the Nifty implied opening is indicating a cut of, over 100 points at the moment. So it's not looking good at all. I think 200 points now down in terms of the implied openings. There we have it. The big trigger, of course, will be HDFC Bank's numbers, right? The ADR is down about 7% post-earnings. And a lot of internals are very problematic in HDFC Bank's numbers, whether it's the core fee income, which is quite weak. The NIMs are flat quarter on quarter. There is a bit of compression as well year on year. The credit costs are higher for HDFC Bank. And, all of that put together just gives you a discomforting feeling about how the rest of the banking sector may shape up in terms of earnings. There is some caution that's definitely seen in the mid-cap space as well. The market breadth has weakened. That's what we saw in the last couple of days. And if you look at it, mid-caps and small caps are now trading at a premium to the large caps. I was going through a recent Motilal Oswal report where they said that the 12-month forward PE for mid-caps is now at 27 times, which is almost a 40% premium to its long period average. If you look at the small cap index, the 12-month forward is about 20 times, which is a 7% premium to its long period average. So, if there is a big pullback in the market, then there's a high likelihood of it coming through in the broader end of the market. Now, there are a lot of important numbers today. There's Asian Paints, there's LTI Mindtree, Happiest Mind. And today, in terms of earnings reactions, not just HDFC Bank, but you also have some disappointments coming in from the likes of L&T Tech, etc. So we'll keep an eye out on all of these stocks. Largely, it's not looking good for the market. Global markets are also under a lot of pressure. Asia, as we speak, Hong Kong, I think, is down 400 points. The US 10-year yield is back above 4%. So things are looking very, very tricky in trade. As you said, the important point to see is whether this market sees a buy on dips, and I think there could be a tough chance of that happening.
Well, let's see how it goes, Sonia. But in cricketing parlance, the Bulls will feel today that they're looking at an absolute green top and they've been put into bat, and the opposition, which is the Bears, they have 5 pacers that are going to be bowling to them, because things are stacked out against the Bulls for today's trading session. Let's run you through a few data points. The global cues, well, they're looking very skittish. If you look at the strength in the dollar index, you saw a bit of a spike in terms of yields. And Fed talk as well is more hawkish than dovish. So that's one issue. HDFC Bank as well as LTTS, both from the IT pack as well as from the Nifty Bank, you had disappointments. HDFC Bank, obviously a far larger weight out. Then the Wipro ADR was down close to around 6-7% overnight. I don't know why, but there was a very, very large volume out there as well. So both those two pillars could be in a bit of a flux. The Nifty Bank, that plays out weekly expiries. That's another point to look at. And the broader market resilience, that's going to be a focal point, because that's been the big talking point for the last 12 months or so. Are we getting to a phase when we'll see some bit of pressure coming in from the mid as well as the small caps? HDFC Bank, why is that important? 13% weightage on the Nifty. The recovery may take longer than expected, and that's the bit of a problematic issue. Though valuations are in their favor, but the read-through is that the recovery may take longer than expected. And for the industry read-through, well, what clearly came out was deposit mobilization could be a challenge for other banking names as well. So the Nifty Bank will be reacting to that. LTTS, as I said, the numbers were lower than expected. The growth wasn't as much. So maybe the IT index as well comes in for a bit of selling. On the Nifty, we were talking about the premium being at 40-50 points out. That's turned into a discount. So some part of the market went short yesterday, but not the FIs, because their positioning continues to remain net long on the index. So the bulls need to turn to someone, right? So let's pull up the 3 names that maybe, in fact, could hold one end up. You have Reliance Industries that's been in fine form. Yesterday, it came in for some selling. ITC yesterday, it crossed the 20 DMA. So, and yesterday it ended virtually at the high point of the day. And L&T, the pure play on India, that as well. So one of these 3 or all these 3 will have to hold up for the bulls to fight back in today's trading session. The PCR we highlighted, when it goes to around 1.5, we normally see a pullback. That's the way it played out. Yesterday, it cooled down back to around 1.2. Because called writing came back into play. 22,100, 22,050. Aggressive writing is what we saw out there. But let's get to the levels then. I'm looking at support levels today because that's going to be the important part. Now, you have the highest open interest, at the 22,000 put. Yesterday, there was some unwinding of positions out there, but the premium at one point of time was around 120 rupees. So on a closing basis, you'll want to defend the 21,880 odd, which is going to be crucial. And if you breach that, then you go down to the 20 DMA. And normally the first touch of that is defended. The Nifty Bank, very important. It's going to start off below the 20 DMA. But by the end of trade, you'll want it to end closer towards that mark. Otherwise, maybe we go ahead and test the January 10th lows from where we did bounce off. So the GIFT Nifty is suggesting a pullback only if you have a very, very great risk appetite. Maybe after watching the first hour low, you put a 50-60 point stop loss on the Nifty, and maybe you look to buy into the Nifty. But otherwise, the cues are stacked against you, and we'll have to see who's going to bat for the bulls in today's trading session.
Oh, absolutely. And, it's an earnings-heavy week as well. The rest of the week, that is, you have Kotak Mahindra Bank, you have HUL, you have Reliance Industries coming through in the rest of the week. So lots of big triggers to watch out for. And then you have Asian Paints today as well. So let's kickstart the show very quickly with telling you what we have lined up in terms of market opinion.